Welcome back. You're watching this special telecast of Nifty scaling its previous lifetime highs and actually breaking into new ground, new territory. So we are right here at the atrium of National Stock Exchange. The ticker is just moving right behind me, and I also have with me here at NSE one of the most trusted voices in the market, and of course a regular and very loved contributor on ET Now, Nilesh Bhai. Nilesh Bhai, thank you very much for joining us on ET Now. It looks surreal, right? Just 18 months back we were at this level, and they spent so much of time, and a lot of actually gone through. Wars have happened, unfortunate COVID has happened, we almost went to 16,800 and now above the 19,000 mark. What exactly is working in our favor in your view?
So let me answer this question from a spiritual point of view. It looks like as if the God above is Indian. We had worries on terrorism from Pakistan, now they are in trouble. We had worries on trade deficit, March 23 number came at 1 billion plus. We had worries on oil, from triple digit it is double digit. We had worries on inflation, it fell down. We had worries on monsoon, it recovered. It almost looks like that there is someone at the top who is ensuring that India's problem gets mitigated. Looking at it from an economic point of view, today we are in one of the best positions one could dream of. We are like oasis in the desert, growth above estimate, inflation within the target range, investments reviving, consumption little bit subdued but relatively on its own rather than from stimulus. Whichever way you look at it, India appears to be in a very, very comfortable position, which is why investors are bringing money into India.
So FIF friends have come back in style, and DIIs, of course, you are representing that community, and domestic flows have been very buoyant. What is the outlook from here on? What would the message you would like to give to Indian investors? Because many of them are thinking, yes, I participated in the bad time. Is it time for me to book out? Or should I ride the new territory, and the outlook is pretty healthy right now, as you were saying? What would your message be?
So undoubtedly we are at all-time high level, but undoubtedly we are not at all-time high valuation. There is Triveni Sangam of flows, sentiment and fundamentals in India. As you mentioned, everyone is a buyer. There is very, very limited supply. Some private equity guys, some IPOs, but demand is aggressive and more supply is restricted. Sentimentally, everyone is positive in India. They are seeing our numbers. And most importantly, fundamental. Despite all-time high level of market, we are just little above our historical average. And it can be justified based on our growth potential. So with this Triveni Sangam of flows, sentiment and fundamentals, my recommendation to investors, stay long India growth story. There will be ups and downs. Tomorrow, who knows, market can correct.
Sure.
But stay invested for long-term India growth story. The wealth creation, what we saw in last 30 years, in terms of quantum, we'll see bigger wealth creation in next decade.
Wow. Nilesh, let me play the devil's advocate. There is a sense in the market that the spate of blocks which are happening from the promoter side, from the private equity side, many of them have happened in the last 15-20 days alone, is a sign that perhaps in the medium term we may be topping out, because these big sellers are better informed. They think that the markets are getting slightly on the overvalued side. Plus, I read Geeta Gopinath's commentary today from the IMF saying that perhaps global markets also, assuming that inflation is completely under control may not be the right assumption. What are your thoughts on these two, inflation and supplies?
So Ajay bhai, all the learned investors dumped India between October 21 to June 22. They took out $35 billion. Today they have brought in maybe $10 billion or $12 billion. And market is already well above that level. So when we have fundamentals with us, I don't think so we should worry about what others are thinking. Today, what are investors looking at in India? They are looking at 3G. Growth, earnings growth better than rest of the world. Governance standards far better than our peer group. And green economy. We are transforming our economy towards green. As long as we deliver this 3G of growth, governance and green, I think our markets will reward investors. Will there be ups and downs? Undoubtedly, yes. But will it attract capital flows from all over the world into India? My confidence is yes.
You were telling me about somebody you spoke to recently who services a lot of international clients, and you were surprised that very few of them actually are taking India seriously right now.
So today morning, when I met this gentleman, and he said, in last 1 month we met 100 FPIs physically. Of that, 50% are underweight India and rest are just equal weight India. I don't think so. This kind of underweight we had seen in our history for a long, long period of time. Globally, if we look at our GDP share versus our investment share, people are 50% underweight on India. Now, this is a thumb rule. This is not a scientific way to look at things. But put these two things together. Anecdotally, people are probably underweight India or equal weight India. And looking at our 3G potential, they'll have no option but to become overweight India.
So that's the scope of further expansion from here on.
And, we could be lucky. As I mentioned, someone at the top
Divine
is
intervention, right?
divine favoring India. So if MSCI upgrades Korea out of emerging market to developed market, it could result into a flow of about $20-25 billion over next 24 months. It won't come one way. It will come over a period of time. But imagine those kind of supports coming into our market and making people more underweight than they are today.
Sure.
So my feeling, at lower level, there will be enough buying from domestic and global investors.
Let's talk about certain specific parts of the market. We have seen in the last 15-18 months, autos have come back. First it were private banks, then PSUs and Navota kind of. What is the one section of the market in your view which is really attractive right now, or perhaps under-owned and deserves a closer look?
So I think pharma is where there could be, where auto was say 18 months back. Under-owned sector, not many things favoring them and things slowly turning around. One, US medical supply is at a lower level. Their inventory levels are depleted. There could be buying from there. US FDA observations are now, even in critical nature, are saying that please continue to supply 75, 80, 85% of capacity. We'll make a token restriction on you. Third, generic pricing is now on the way up. Otherwise, generic suppliers are walking away. Put all these things together, cleaner business, good governance, cheap valuation, under ownership, and business looking better. I think this sector should do well in the days to come.
So after 5 years, pharma is not coming back on the radar. One section of the market, mid caps are at all-time highs. Small cap index still yet to cover that ground. And that excites the most part of the market because it's, retail likes that. A lot of multi-bagger potential, all of that. What are your thoughts on mid-cap and small-cap valuations also, and some theme which you like there?
So while overall small and mid-cap looks okay, I think there are pockets where there is a lot of euphoria, either because of restricted float or because of potential explosive growth or some interested party activity. Put together, we have seen some of the small and mid-cap and micro-caps running at valuations which, in our opinion, are unjustifiable. So my request will be, please stick with the quality. Don't go with tips and don't go with all those Telegram channel recommendations. Stay away from there.
Yes, because that is also what comes along with markets high, is that a lot of people get sucked into the fear of missing out kind of a feeling.
Invest without FOMO. Invest with conviction on long-term India growth story.
What are your thoughts on the earnings quality? This quarter gone by, there were fears of margin pressure, all of that, but we were kind of pleasantly surprised with the quality of earnings. What is the sense? Can we start improving on the trajectory?
My feeling is that margins will expand from here onwards. We had about 10% earnings growth for FY23, which is much lower than 15%, 18% at the beginning of the year. Next year's actual earnings growth will be higher than 10%. Maybe it will be 12, maybe it will be 13, but we will have a higher earnings growth than last year.
One question I want to ask you is about this very massive financial services merger which is happening. Without commenting on the companies, I want to ask you that in the next 10 years, we don't have a single $1 trillion company in our country right now in our market. They said that one energy-led conglomerate perhaps could be the next one. Then this mega company which is coming. In the next 10 years, how many $1 trillion companies do you expect from India? Without taking specific.
So today we are at roughly about $3.5 trillion GDP market cap.
Yes.
In a decade or so, even if 10% of the market cap is held by one company, we need to create $10 trillion market cap,
Yes,
which is
which
about
is
three
your top
times growth in 10 years. Now, that doesn't look extremely difficult, but it's a tall target
Okay.
because we are talking in US dollar
15
terms, not
15
rupee.
years it is possible.
15 years, I think it's a
Entirely
better bet than in a decade. And companies which will be able to adopt to the new environment, whether it's related to technology, whether it's related to some of the critical minerals, who knows? Eventually, will there be a company in India which will become a $1 trillion company? Answer is yes. The biggest advantage, Ajay bhai, for us is that in the 50s, 60s, 70s, Fortune 500, our talent was going and running Fortune 500 companies in US and Western world. Hopefully those talent will stay in India and they'll create Fortune 500 companies here.
Okay, let's talk. One of the point which I want to talk to you about is that our country is being sold to foreigners in a nice way, I'm saying, like never before. And the person who's really spearheading that task is our Prime Minister Modi. Right now, he's just back on the US trip. It made massive headlines, but we'll stick to the business side. The way global giants across sectors are eager to expand their footprint in India, which are the sectors you think will attract biggest flows, joint ventures, technology tie-ups and transfers, all of that?
I think a lot of flows will come into unlisted segment, but technology and telecom, this will be one sector where there could be huge opportunity for foreign capital to come in. Clearly on product side, Indian technology companies are lacking. On telecom side, there is jugalbandi between India and US to create partnership to thwart or to lead 5G, 6G technology. So my guess is that the capital will flow towards technology and telecom sector from foreigners' point of view.
And when you say technology, even the complexion of technology is undergoing a change.
Absolutely.
We're seeing new energy-related technologies coming, electronic manufacturing, never discussed before. Now, every other day, one company is coming to market, drone companies are coming.
Even in a mundane sector like car, electric car or hydrogen car will be technology-led investments.
Right. So you see that the Nifty constituents right now is may actually undergo a massive change in the next 10 years. You see fintech kind of companies, new energy companies, all these electronic manufacturing will become part of the benchmarks going forward?
Undoubtedly. There is a transformation of Indian economy from agri to manufacturing to services. There will be transformation of Nifty indices to reflect that. Indices will lead the economy in terms of reflection. So whatever changes are happening on economy will be reflected into indices.
Nilesh bhai, you have a massive research team by very capable people there, some of them. What is the feedback they are getting when they talk to managements on ground across market cap and across sectors? Is business sentiment also reflecting the same kind of positivity which we are seeing on the exchanges right now?
So by and large, promoters are more positive. They have leaner balance sheet. They have become more productive and efficient. And most importantly, they have now got the confidence like Indian cricket team. हम कहीं पे भी जाके खेल के जीत के आ सकते हैं.
Okay, so yesterday we were celebrating Medium and Small Enterprises Day on ET Now, and this is becoming a very large part of the economy after GST and technology, the jam trinity as they say. We are also seeing related places in the market like microfinance, MSME lenders, a lot of smaller medium enterprises on the exchange. In the SME exchange has become very vibrant. You see a lot of value creation happen in the mid and small companies which adopt technology and newer trends. Something there?
So for companies to become successful, they require three things. One, vision to do something. Second, execution to convert that vision into reality. And third and most important, respect for governance. As long as you have these three things of vision, execution and governance, I'm sure they'll become successful.
What are some of the risks you're seeing in this market?
The risk is risk of self-goal. In the past, we have always had opportunity to score a goal and we somehow or other missed it. So as long as we deliver on this 3G of growth, governance and green, I think we are set.
Excellent. On this historic day, Nilesh bhai, thank you so much for joining us today on the show.